Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about why I just bought Snowflake stock. So I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button and subscribe to the channel. Also, if you guys want to learn more about investing in the stock market, I would recommend going ahead and checking out my course down below. It's going to be the first link. We talk about how to properly invest in the stock market. We talk about fundamental analysis, technical analysis, retirement taxes. We talk about it all, guys. First link down below, go ahead and check it out. So now, let's jump into it, roll the intro, let's go. So now Snowflake is a cloud-based warehouse company that just actually had their IPO, and the stock's been absolutely going crazy. We had an IPO breakout going from around $250 all the way to about $320. Sold off and is kind of consolidating down right now. And a lot of people thought that this company is going to trade around 120 bucks, but that got boosted from 120 to about 250. And honestly, there's a ton of awesome investors behind this company. You know, they have Warren Buffett behind them that put billions of dollars into this company at around 120 bucks. So he's already in the billions in profit, but overall, I do think this stock does have a ton of long-term potential. So now let's talk about the fundamentals. So now one of the things I love about this stock is their margin rate. They have a margin rate of around 56%. So really what that means is for every $100 Snowflake brings in, they profit around $56, which is extremely high. If you compare them to Tesla, Tesla has a margin rate of 1%. So for every $100 Tesla brings in, they only profit around $1, which isn't very good, and they could definitely improve on it. But since this stock has such high margins and their financials are honestly really good, they have growing revenue, growing user base, the company is looking great for the long term. So now they don't have any 2020 earnings yet because they actually just became publicly traded. And in 2019, their revenue was around $264 million. And this company has been growing around 175% year after year. So this year we can predict it's going to be right around $500 million. That's my prediction. And honestly, that is a very, very big jump. But I do think, looking at previous history, I would not be surprised if they hit that number this year. So now they do have a float of around $25 million, and that's pretty fair for a lot of growth stocks to have about that many shares, so that's nothing to be worried about. So now Snowflake does have a little bit of long-term debt, and that's fine. They have around $193 million in long-term debt. And taking on long-term debt actually grows the business. You just want to make sure the company doesn't take on too much long-term debt where they can't pay it off. Look at Ford. Ford has around $100 billion in long-term debt. You know, yes, they do bring in a lot of money, but that long-term debt's really, really weighing down their stock. And if you compare it to this company, they don't have too much long-term debt, so their business can still grow and they can still use that money to make more money. So now Snowflake does have around $127 million in cash, which is actually pretty decent. So they can use that money and continue to grow the business. You know, if let's say their revenue slows down or whatever happens, they can use that cash to grow their business, which is great. So now let's go ahead and look at some of the technicals like support, resistance, and why I bought into it. Let's go. Alrighty guys, so we have ticker symbol SNOW, that is Snowflake stock ticker. Now you guys can see, looking by this huge candlestick here, that is that IPO breakout, really broke out to $320, sold off here, and now is using this 200 moving average line as some resistance. Yes, we're just getting some short-term sell-off right now because of this huge explosion here. A lot of people thought that this stock was going to trade around 120 bucks. That's what I thought, but it actually opened at around $250 and really exploded up. So now we're just getting some temporary sell-off. Do I think it's going to fall back to 120? Probably not, because there's a lot of awesome investors behind this. Now, it does look like we're slowly kind of consolidating out here, and honestly, there could be a possible reversal coming because it's not continuing that downward trend. And if it is, it's very, very small. But overall, looking at this chart here, resistance is pretty much at this 200 moving average line. Its support is at around 227 and around 233. So now I've been really investing in this company now for a little bit, but why I'm investing in it, because I do think they have a ton of long-term potential. Carter, are you actually buying a ton of it? What's your strategy behind it? Well, here it is. I'm actually using the strategy dollar cost averaging. So really what I do is I take about $100 a month and I invest it into a lot of my growth stocks. So what that does is it gets me a good overall average price. When investing into some of these high volatile growth stocks, we're going to have a ton of price action. And if you can just slowly invest, very, very consistent, $100, $20, $10, whatever you guys can afford. Really what that does is it gets a good overall average price. So if the stock continues to go up, then you make money because the stock value is going up. And if it falls, you're just averaging your price down. So if you have $1,000, instead of investing one lump sum, you take $100 a month for the next 10 months and invest into it. So your principal of $1,000 is still the same. You're just spreading out that monthly payment. So honestly, my average price is pretty decent. It's right around $246. So yes, I am down a little bit of money, but I'm not too worried about it because if it falls, that is just a better opportunity for me to average my price down. That's my mindset behind this. And yes, this is a pure growth stock. I'm not going crazy with investing in this. And I do think before you should have a nice solid base of ETFs, bonds, to act as your defense for your stock market portfolio. Don't go crazy. Don't go spending hundreds of thousands of dollars. Make sure you guys have that base of ETFs, bonds. You guys will thank me if some of these stocks fall down a little bit. But overall, obviously, there's no dividend because this company is a recent IPO and they're using that money to grow their business. So overall, I do think this stock does have a ton of long-term potential, and I would not be surprised if this stock hits around $300 by mid next year. That's kind of my price target for it, and a lot of analysts think it can go a whole lot higher. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bye.